Let's start off with what's happening on the
you.
money side, on the fixed income side, which is your area of speciality. We hear that the CBK has been in the market with reverse repos, trying to ease out the liquidity crunch that we've seen recently. But investors are saying, you know what, the CBK is now sending too many confusing signals.
Yes, it's actually quite true. I mean, CBK is sending out mixed signals. Last week, they actually brought down the overnight lending rate, the discount at the discount window, but they put in policies that made it quite difficult for banks to go there to borrow overnight. So then this week, which is actually another way of tightening the monetary policy. Then this week they inject, I mean, they were looking for about 15 billion. I think they got roughly about 12 billion. So, they gave out about 12 billion. So, I mean, it's quite confusing. No one knows what way to look. But I think it was a necessary step because looking at towards the end of last week, I mean, most of last week actually, and starting today, the overnight market, the money market was crazy. Liquidity was very tight. I mean, overnight interbank lending rate hit a high of 11.5% at some point last week. Repurchase agreements were being done horizontal repurchase agreements were being done between banks at crazy interest rates as high as 15-12% for a week. So, I mean, the CBK did have to come in and ease the liquidity situation. What I think is actually, I mean, some of the actions are a bit haphazard, looking at they'll tighten too much, loosen again, tighten, loosen. So it's not quite clear what they're looking at. But also, you know, they have a bond issue which matures which is valued next week, Monday. So they did have to come into the market to ease the liquidity situation.
I mean, all those issues withstanding, Kenneth, the fact is this is now the fourth straight week of poor performance on the NSE, and investors just don't know where to go. Should they go into equities? Should they be going into bonds? We're seeing interest rates rising, but again, the exchange rate is not particularly attractive, and hence inflation also on the rise.
Actually, I think what we're seeing locally, we're actually in quite a unique situation where both markets are buyers markets. With T-bills at levels, the 3-month T-bill at levels of almost 9%, it's at 8.9, and equities offering so much value with such low Ps, especially in the financial sector. Both markets are buyers markets actually. So, I mean, it's quite a unique situation.
Well, in that case, then, Trancentury came onto the market last week expecting to arouse some kind of interest. There was a lot of hype initially, but that hype is waning. The share price declining 5.7%, as Mashudu alluded to earlier on.
That's quite true, but what I think with Trancentury is basically, I mean, it's a bit expensive, and also the investors were, I think the investors were not so keen on it because there's a bit of, the supply is a bit tight, but demand was also a bit weak. But I think on the Britak IPO, we'll actually see a lot more interest. What happened with Trancentury, it was more of an introduction, but with a Britak IPO, we will see a lot of speculators, fund managers, local investors coming in to try and speculate on the price once it's issued.
All right, let's talk about where investors, how they can allocate their portfolios, because at a time like this, there's a tendency to liquidate their positions and want to participate in some of these ITOs or look for those bargains, for instance, that you're referring to that exist in the market. Where would they find value at this stage?
I actually don't think it would be quite wise to liquidate all your positions and put them in the IPO. I mean, since both markets are offering value, I actually think it's pretty good, depending on the investor. Personally, I think I'd divide it between the fixed income market, where I'm getting amazing yields. I mean, 2-year papers at levels of 12% and above. And also in the equity market, where we're seeing some counters such as Corp at 15 shillings, KPLC at 20, KCB at levels of 22.75. I mean, all those are buys that have strong fundamentals. So basically just spread out your money, diversify over all both markets.
I mean, you mentioned KCB, and it is a market darling. It's a blue chip. It's a bank with great expansion plans, great technological innovations. So it's looking good, but, you know, the PE ratio is fairly high for banks like KCB, Barclays, Equity, and the like. They've got their results coming through for the second quarter next week. What are your expectations?
Actually, okay, we shouldn't expect such, mind-blowing results. But the thing with KCB is a long-term buy, as you said, with the expansion policy, especially with the independence we've seen in South Sudan. We expect that that part of the market to really drive their revenues. KCB is always a buy. We're seeing a lot of foreign investors coming in to pick up the counter at levels of 22.50 and above. So I mean, it's a long-term buy. Next week might not be so mind-blowing, but we should expect the future looks quite bright for KCB.
Okay, also finally, we've seen some foreigners flocking into Safaricom. That's to be expected. But also gainer today, Olympia Capital moving up 2.4%, Centum also up 2.4%, and Scan Group's had some interesting news with the acquisition of Ogilvy East Africa, which has about 10% of the advertising market share. So what are your prospects for Scan Group?
Scan Group, it's looking good. They're with their expansion most of East and Central African market. We should expect good results from Scan Group. They have good strategies. It's a good counter to buy.